Should we talk about the Bitcoin revolution?
Yeah.
You already
Bitcoin
spoke.
revolution. It's all Bitcoin.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In this video, let's discuss these topics and more.
Let's just focus on BTC for a second. What is it? It's the rate of increase in Bitcoin per share. So if I think we're getting close to almost an 18%, like 17% BTC yield for the year so far. And that means that between January 1st and today, you've gotten more than 17% more BTC per share. Mm-hmm. If I gave you a company and I said it's got a dividend yield of 17%, and I give you another company that says it's got a dividend yield of 0, it's like, well, you would value the second one based upon the underlying asset, but you're not getting more. But the first one, you would actually take the underlying asset, and then you would take the yield. And then the question is, how long will they generate that yield, right? And what's the average yield over the lifetime of my holding period? So in that case, I mean, you could say, if I expect 4 to 8% yield, you could put a 10, 20, or 30 PDE on that. Sometimes people will, it's basically your earnings per share in a way, but, we can't really call it that because it's a non-GAAP measure, and it's a Bitcoin per share type measure and that's valuable to people that love Bitcoin. But when you think about it that way, right, the simple model there is the company should have a premium equal to the multiple of the yield, right? If you think the multiple should be 20, and if you think the yield will be 8%, then you could say the company should trade at 160% premium to the underlying asset, right? So the ability to generate that yield will justify that premium. And it's a simple model, but it's not the whole model. The real issue is how you're generating the yield, and the way you're generating the yield is through issuing securities to the public market, that generate that yield. And one way to do it is by issuing equity at a premium. That's a simple way, the most simple way imaginable, right? Another way to do it is to issue convertible bonds at a premium to the equity, which may or may not be at a premium to the asset. That's a slightly less simple, but still kind of straightforward way to do it. A third way to do it is I just issue a fixed income instrument that pays 7%, and I buy Bitcoin with it that yields more than 7%.
Which is what you're doing.
Right? Well, technically, that's not exactly what I'm doing right now. What we're doing right now is we've issued equity at a premium, and we've issued convertible bonds at a premium. If the company in the future were to issue preferred stock that had a fixed thing, or issue bonds, corporate debt, or something that had a fixed coupon, then you would be swapping the fixed for the Bitcoin return. And of course, in that case, look, if your forecast for Bitcoin is to go up 7% a year, and the company's paying 7% for their capital, there's no yield. You see, right? If your forecast is to go up 21% a year and the company pays 7%, there's a big yield, right? And so if you use BTC yield, then you just think about what's the company going to do to get to it. And we've just got lots of different tools to get to it. And there's other things. There's 1,000 things you could do, right? I'll keep it for the sake of our interview to just those few because they're simple to discuss. And, our guidance, our target is 4 to 8%. We've done more than double 8% this year.
So it feels pretty conservative then.
I think we try to be conservative in our guidance because we don't want to disappoint our shareholders. But clearly, we will pursue our objective, as rapidly as we can in a prudent fashion.
Should we talk about the Bitcoin revolution?
Yeah.
You already spoke.
Revolution. It's all Bitcoin.
Gold remains a stable investment during inflation and uncertainty. while Bitcoin offers higher growth potential, but with greater volatility. Gold is a tangible, highly liquid asset, ideal for hedging against inflation and crisis. Bitcoin is a digital asset with high liquidity but faces regulatory challenges and high price swings. Historically, Bitcoin's price often surges after gold peaks, showing a strong correlation. Bitcoin is breaking out from a 6-month consolidation, indicating possible strong upside. Gold offers steady growth, while Bitcoin's volatility requires a higher risk tolerance. Both assets are valuable, with gold providing stability and Bitcoin offering high growth opportunities, depending on investor risk appetite.
There's ETFs like BlackRock or Fidelity that are comparable to us in size, but those are overnight deposits. So if you said, hey, I've got $17 billion in deposits, people can take the money out of the bank tomorrow. Well, they just basically are a trustee holding the money, and they return it when they're asked to return it. You can't leverage it, and you can't build businesses on top of it. MicroStrategy has permanent capital. So, for example, we can do things like we can issue convertible bonds on top of that capital. So, if you have, we have 16 to 17 billion in Bitcoin exposure, we have 4.2 billion in convertible bonds. The bonds we can issue fairly cheaply because we have a stock. The stock reflects the permanent capital of the Bitcoin, but that's not redeemable either. That means that it can generate a premium to the Bitcoin. So as people trade the stock and they trade the options on the stock trades at a premium to the asset value. And when the stock trades at a premium to the asset value, the company issues either equity or convertible bonds at a premium to the underlying assets. When we do that, we don't just put the money in the bank or in T-bills. We actually invest the money in Bitcoin. So you can imagine when the company issues, if we were to sell $1 billion of equity in the market and it's backed by 500 million of Bitcoin at 100% premium, then we buy the Bitcoin, and 3 days later, we've generated a $500 million gain for our shareholders in Bitcoin. So that's very interesting. That generates what we call a BTC yield. Now, if we do the same thing with a bond, a $1 billion convertible bond, we don't do it at 100% premium. It might be a 200% premium because the bond comes at a premium to the stock. So when you go up 40% over a stock, which is 100%, now you're looking at something that looks like more like 180%. So now a $1 billion bond sold into the market's backed by $350 million of Bitcoin. We buy back the billion of Bitcoin. We capture the $650 million gain, another BTC yield.
A crypto analysis predicts Bitcoin could reach $233,000 by Q1 2025. Meanwhile, the FBI arrested a man for hacking the SEC's X account, and Trump's token launch flopped. A crypto analysis account predicts Bitcoin will surge to $233,000 by early 2025, driven by market trends. The FBI arrested Eric Council Jr. for the January hack of the SEC's X account, which falsely announced Bitcoin ETF approvals. Former President Trump's LLFI token launch sold only 4.24% of its total supply on day one, failing due to limitations in transferability and website issues. On October 14, U.S. Bitcoin ETF saw $556 million in net inflows, with Fidelity Wise Origin Bitcoin Fund leading the pack. Senator Warren and John Deaton clashed over crypto regulation during a Massachusetts Senate race debate, reflecting broader political tensions on crypto. Bitcoin's growing institutional support and regulatory developments continue to shape the market landscape heading into 2025. Bitcoin's price surged by 9% this week, fueled by increased whale activity. Wallets holding 100 to 1,000 BTC rose significantly, suggesting bullish momentum. Bitcoin has gained 9% in a week, maintaining its bullish momentum despite being 7.27% below its all-time high. Large investors accumulated BTC during a price dip, with 268 new wallets holding between 100 to 1,000 BTC added in a few days. The recent rally was largely driven by whales accumulating Bitcoin, signaling their confidence in future price appreciation. The long/short ratio above 1.023 and the surge in MVRV for long-term holders indicate growing market confidence. Fund flow ratio hit a monthly high of 0.15, showing that buying pressure outweighs selling. With strong whale activity and favorable market sentiment, Bitcoin is poised to reclaim the $70,000 mark soon. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.